Welcome back, everyone, to Vox Markets. My name is Paul Hill, and by popular demand, I'm delighted again to be able to speak to Ian Strafford-Taylor, CEO of Equals Group, a leading international e-payments and fintech platform. So welcome, Ian.
Hi, Paul. You managed to say all that without taking a breath, so I'm very impressed.
That's good. Well, big congrats on today's World Cup winning performance for 2022. In fact, I think it's correct me if I'm wrong, but I think it's the third upgrade this year. So obviously the business has been doing really well over the past 12 months. Can you just, if we start there, just take us through what sort of driving the improved performance this say the last year?
Yeah, I think fair to say that I never find the right word for it. It's not legacy businesses, but our core businesses, if you want to call them that, of international payments, cards in general, and current accounts have all been doing well. And overlay on top of that, the solutions, which is doing very well from a standing start, only 18 months ago. And you get that recipe that really drives supernormal growth. So, 61% growth. I'd like to say we could sustain that forever, but it gets harder as the numbers get bigger, obviously. But it's a combination of that, and clearly it's not been the most benign of economic conditions to do that in. So we're really pleased, and we're really pleased that how we've managed to withstand what has been a sort of tough second half to date for the world at large. So yeah, we are delighted.
And in that sort of second half, did you see any effect at all from the September, October foreign exchange, the trustonomics?
Well, of course you did, because you had the pound cratering, and then you had the pound going back up again, and all of a sudden no one wants to touch the dollar. So people get, quite aerated about volatility, how that's good for FX businesses. It is, but to some extent it brings forward a decision of a company to buy or sell currency that they were thinking of doing anyway, which therefore means they won't do it later, if you see what I'm saying. So to some extent it draws business out, but you might get a quieter month after it settles down. Obviously, also to some extent, you're able to put on forward contracts because people want to hedge the risk, and maybe it goes the other way, and so they might take them off. So it's not a nirvana. It can give a short-term boost, and that's why I prefer to look in some ways at FX businesses over a longer period of time rather than month by month, because I think it can be misleading. So yeah, yes, gotcha. We've had some good months on international payments, but we had some quieter months before it got volatile, if you see what I'm saying.
Yeah. Okay. Gotcha. Now, just switching gears to the acquisitions. If you just take us through the Roqqett one last week, and then the one before that was the Connect, which was a sort of two nice little bolt-on deals.
I mean, Roqqett, I'm very excited about on a number of levels. Not least, in the acquisitions we've done to date have been basically international payments businesses, that we've absorbed for scale. On purely, revenue, able to make more money out of them, eliminate the overhead type strategy, lift and shift, whatever you want to call it. Roqqett is a very cool piece of tech. And if you think about what we can offer a corporate now, be they big all the way down to sort of SME and the smaller end of it, we can offer a lot of things in one place, the ability to make payments, bank account or cards, whatever they choose, all in one place, one pool of funds, own name IBANs, multi-currency, as we know. But that's only useful to a company once they get paid by their B2C or B2B customers. So we weren't offering that last bit, if you will, of the whole sort of transaction chain that a company can be involved in. So Roqqett gives us a window into doing that. There are a lot of businesses that allow you to take debit and credit card payments, so-called merchant acquiring businesses. Very congested space, it's very Me Too-y. Roqqett is different because it's offering an alternative to that. And if, like me, to some extent, of course, we all knew about open banking, but I kind of thought, well, I wouldn't use it. I don't want people fishing in my bank accounts and that type of stuff. So it's been an eye-opener for me that, if I could just talk you very briefly through what would happen. Let's say once Roqqett is installed on FairFX on the currency cards, then you come to load your card, you can pay by debit or credit card, or you press, instant bank transfer option, which is Roqqett. Roqqett will ask who you bank with, So let's say it's NatWest, press NatWest. It will take you in your phone straight to your NatWest app, facial recognition or whatever to get you in, your normal stuff. It will pre-populate everything. And you just press the approve or not approve button and it'll send the payment. So it's so quick, so easy for the user to actually transact. So there's none of this filling in forms and that malarkey. And for our customer, or the merchant as it's called, they get paid immediately, and it's just quicker and easier for them. Compare and contrast, if they get paid by debit or credit card, they may get paid 3 days later, or in some cases up to 7 days later, depending what industry they're in. So you can see some of the power of this, both for our customers, in sort of and it's way cheaper, by the way, because it's not, MasterCard or Visa or Amex taking the charges on the other end. It's cool, and it extends our reach, widens the universe of people we can sell to. So yeah, I'm really excited about it. It's some really bright people as well involved in the products who now become part of the group. So
good.
All in all, super. And you know what? Going back to our results, we can do this now because we're throwing off cash, and cash is great, but put it to work, right? That's what I believe our shareholders want us to do, rather than just sort of sitting on it and doing nothing with it.
Yeah, no, I'm totally with it. Just to sort of like shine that light a bit further on the Roqqett acquisition. So let's just assume, just hypothetically, I am sort of like a wine merchant, and I buy champagne in from France. So I bank and use the forex facilities already with Equals, etc. But I want to sell for, say, Christmas and for New Year a whole bunch of cases of champagne to consumers, and I currently the consumers currently pay with their Visa and NatWest, and MasterCards, etc.
Yeah.
Would this allow me, as one of Equals' corporate customers, once you've integrated it, for my then consumers inbound payments to me rather than outbound payments to me, which you already do?
Yeah,
with
totally.
And that will remove those interconnect fees as well.
Yeah.
Wow,
clever, isn't it? It's clever.
So that's a real.
So we can go to our corporates now and say, we've got a thing that will allow you to take payments from your B2C customers or B2B quicker, easier than it was before, and cheaper for you. And by the way, it's like, actually, I quite like one of the little taglines that Roqqett has on their site, which basically says, like PayPal would be if it was made now. So it's, we're all used to PayPal. It's a bit clunky, got to fill things in, a bit expensive. This is, we've bought this tech at a very good price, I should say, such that, they allows us to do exactly what you're saying. And so that could be our current customers, gives them something new, and also means that we can go to customers, potential solutions customers, and we've got another hook to get them on board, because we've got a way for you to get paid quicker, cheaper, and easier.
It's all. Basically,
and you would never have only Roqqett. You would still have the ability to take cards, but you'd make it cheaper for the consumer to pay by Roqqett.
Yeah, that's basically, as you say, that's really, you're doing all the outbound international forex and corporate, and now to have all the inbound going into your clients is the other half of it. That's enormous. Okay, you've got my tick in the box on that one. Just on Equals Connect. Obviously that was a 52% owned subsidiary before, so you've just you bought the remaining 49% at a good price, actually. And
it was always the intention to do that at some time. It feels like the right time, and Equals Connect up to now has done very well, but it basically is white labeling our FX platform into other smaller FX businesses, really. And what we now want to do with it is to get it so that it coincides with solutions, in that solutions are, now we have the API stuff starting to come in, means we can white label solutions, and we've got a white label platform over here. Those should be part of one thing. And rather than just selling that to other FX businesses, sell it to IFAs or estate agents or removal companies, people that want to have a proper white label platform where they can actually do the payments for their customers. And we believe that's another very lucrative distribution channel for what it is that we have to do. So it made sense to tidy up the minority shareholding at this time. And
Yeah,
again, we couldn't do it without a cash pile, right?
Yeah, and it's that one's earnings accretive, isn't it? Now, just putting those two together, what's the sort of the integration of these programs? I mean, I was listening. This Connect is already integrated, so there's
Connect's nothing new to do, really. The good thing, Craig Granger, who was the CEO, stays with the business as well, so it's not because he provides a lot of horsepower, so that's great. So nothing really new to do there. On Roqqett, given the nature of it, at least to start with, we're going to, it's part of the group, but we'll run it somewhat separately because it should charge fair effects, for instance, for the same thing. So we want it, and it's got the licenses. And if you try and fold that legal entity into another legal entity, then you have to apply the FCA again.
Yeah.
By the way, we are still waiting for FCA change of control, so I shouldn't get too premature on Roqqett.
Yeah, of course. Yeah.
And if the FCA are listening to this, we obviously haven't taken that for granted. So Roqqett, for the time being, will run as a separate entity, but drawing on group resources, if that makes sense.
Yeah. Okay. And given that the license will there be a group sort of like tax benefit at all in the UK? And just because ultimately you've got carried forward tax losses, haven't you? You've got. I mean, I'm just wondering. I know it's in two separate entities, isn't it? So you'd have. So I suppose you'll.
Well, we really need Mr. Cooper on the call.
Yeah. Okay. He's the tax guy.
Suffice to say, there is. I believe he says we won't be tax paying for possibly another until 2024, I think. Yes, there's obviously some planning there to optimize the tax position, but we're growing fast and throwing off cash and profitable, so that's going to catch up at some point, isn't it?
So, Ian, if putting all that together with the acquisitions and the organic growth, what does that sort of like mean looking into 2023? Because I'm just assuming you've got quite a lot of good operating leverage coming into the second half from that revenue growth. This is in that last year in 2022. So I'm guessing you're not only going to see top line, but you're going to see increasing margins as well as the operating leverage drops down.
I love the fact you're always trying to get me to make predictions.
Sorry about that.
But listen, it's obviously a positive outlook, and we're very excited about what we can do next year and beyond. The only caveat I will put against that is, the obvious macroeconomic situation and uncertainty that there is there. But also, as I think I've said a couple of times, I do view that we're in a position now that we have an opportunity, and I don't want to leave behind that opportunity for lack of horsepower. And so, we are aggressively hiring at the moment. So our headcount will go up, and I make no apology for it. During 2020, 21, 22, it's kind of like we're keeping headcount down. We've got a growth opportunity, and we need to go for it. That doesn't mean to say we're going to, depress profits or anything like that, but there's a delicate balance there. So, and especially when you hire salespeople and marketing people, they don't immediately pay back, right? So, so we will be increasing our headcount, not precipitously or crazily, but we will be in the areas of sales, marketing, and compliance. Because we want to keep the onboarding cadence up, whilst we're top line growing. Because I think shareholders would want us to do that, because so it's a little bit of that operational gearing we'll spend. I guess it's another way of thinking of it, but nevertheless, it's absolutely there. We have a highly scalable platform, and we just need to put as much volume as we can through it as quickly as possible. And our sales and marketing capabilities are improving all the time. We brought in the chief commercial officer in late June. So he's been here 6 months now, and we're attracting great talent. That's the other thing is a lot of so-called fintechs, laying off staff now. So there's an opportunity to attract good talent, and we are doing so. It is a difficult labour market still, but we are definitely managing to do that. So I'm very pleased with the traction we're getting there. So the outlook is great, and so combining growth with more horsepower for even faster growth is kind of what I'm concentrating on, and balancing that up for the good of the business in the medium term rather than just 2023, if that makes sense.
Okay. And is it going to be largely continue to be organic growth, and or you may do some occasional bolt? I mean, I'm just wondering, because you've done so successful your platform in the UK. Is there a non-organic, an M&A opportunity abroad as well to get the?
Yeah, I think it's a great question. I think that where we have lagged possibly some of our competitors is they've been quicker to set up abroad than we have. We have plans for sales outlets or representative offices in a couple of locations, and could and should do more. If you're talking about regulations and the like, it can take 12 months or so. All the regulators around the globe are struggling with getting people. So it's almost better to buy a business,
yes,
than to seek to do it from scratch. But, against that, we don't have to do deals. They have to be EPS accretive. That's kind of a minimum for us. Unless, like Roqqett, they're offering something else in the immediate term. So yeah, I'm open to looking at acquisitions that also bring us licenses and distribution, because ultimately that's what we're talking about, is distribution in other locations rather than just being UK focused. I think, I won't apologise for being UK focused, because focus is a good thing. We're doing a lot of things, and maybe a valid criticism a few years ago, we were trying to do too much at once, whereas now we're way more focused than we were. But now is the time to start spreading our wings outside of just the UK. Great.
Okay, and then you've got a trading update, maybe sort of like in January, or you're going to wait until your prelims come out in?
No. We'll definitely. I'm fond of doing the January one, because we know what our revenue is. We've got a good idea where we're at, and I think shareholders would like to know that. So yeah, we will come out again in about a month's time, just over a month's time. And give people a line of sight of what the final revenue number was, and whether we need to adjust our profit forecast or market expectation further.
Okay, great. Well, big congrats, on the World Cup winning performance for this year, 2022.
Well, yes. I mean, listen, we are delighted. I was looking the other day at where we were only a couple of years ago, and that's worth looking at when you compare the numbers.
Yeah, it is. Yeah. No, I agree. And as England would say, payments is coming home now. We can tell.
Very good, Paul. Very good.
So look forward to speaking in January. Take care, Ian.
Take care.